All it took was that minute break, and we are here live with Nic Chahine, the author of Creating Income with Option Spreads. How you doing, Nick? I missed you last week.
Oh yeah, I missed you too, but I did think about you a lot about that Chipotle you and I had a conversation offline about.
And what do you think? I mean, it's. I talked. You were looking at it, and you said, "Hey, you're going longer term on it. You know, and you weren't even going full position." And then that Cleveland research thing, I have never, frankly, Dennis has given them some credibility. I never heard of them. They give out, come out with that good news of Cleveland research that people are eating more burritos, and it pops up close to 700, 697.93, but then reverses that day. Are you still sticking with your thesis, or are you just tired of this one?
No, I'm not tired of this one. As a matter of fact, it's one of my funnest trades this month. And what I did was we talked about possibly seeing if we can pick at it, and I jumped in with debit put spreads at 680. So I did a $2.50 debit put spreads. I bought the 680 September's and sold the 677 and a half. So all I want is for CMG to be exactly where it is right now, and my spread would be all in the money going into the close and build up equity. I paid about $1 for it, so the potential profit is $1.50, theoretically speaking, because that's the well minus what I paid for it. So it's 250 the width of the spread, and I paid $1. Therefore, I would make $1.50 in profit. But I did more on that pop that you mentioned. I sold the credit call spreads against it at like 745 level area. I can't remember if I did 745.50 or 740.45. So I sold the 740 call and bought the one behind it higher to limit my risk, and I collected enough income to pay for the debit put spread I put on. So now my bearish put is free.
Wow.
So I'm sitting on this free trade, and it's building equity. It's hard to monetize it because the bulls are very, I don't know, they are confident that they're going to close it higher than my spread for September, but I'm not going to wait that long. I'll cash it out in a little bit if it doesn't come up above it. And this morning it's looking at 675 ish, but you never know in this pre open.
Yeah, I was just looking at all that support. The last two lows right around the 674 level. I think, Nick. I think from what I'm going to take away from this discussion is and sometimes when I go into something like CMG, I probably go too short term, and then I look for, I try and buy something cheap. And so obviously the cheap options are the ones that expire worthless. But I probably look for too big a move. Maybe down to, I mean, who knows if it will ever fill the gap. But I think what our listeners should take away from this is, you're making money on it. It really hasn't gone anywhere. But by not putting your full lot on with that debit spread, when it did have the pop to 700, you were able to put on another layer.
Yeah, the decision is always to make cheap or at close to the current price, close to the line, close to trouble. And for me, it's easy to make the decision. All depends on why I'm getting into the trade. If the trade is off of earnings, where it's a binary event that's going to happen, and it's a good size event where it's going to be on off, the reaction to the event, whatever event, earnings is a good example, then I may go cheap because then it may have a 10% move. And then the cheap one will get in the money and get you money. But if I'm looking to pick on a giraffe, like a chart that's been stuck out like that, then I may want to pay up and be close to the money, because then if it starts moving against you like it did, I mean, it jumped up to 700, like you said, and if I went cheap, that would have been completely dead. But since I was close to the money, it still retained, like it went down to 80 cents from a dollar. So I could have closed my position for a small loss rather than wasted my whole bunch of money. That's how I make the decision. If I really want to fight based on some sort of a thesis, then I pay up for the bearish position because I know I can retain some equity in it.
Nick, I want to get your thoughts on Best Buy here because we were talking about this earlier on the show, and it's had a pretty big reversal here from the pre-market trading. Right off the initial earnings report here, it got up to 34.50, and then it's given back those gains very quickly. It's traded all the way down now into the lower 30s. They do have weeklies out there. Can you take a look at the open interest and see what your thoughts there are on Best Buy and perhaps a projected range for this week?
Yeah, I heard you mention that, and I looked at it as soon as you mentioned it, and it looks like it's a bearish picture based on the open interest. That's what the options traders expect. So it looks like a lid of 31 and a low of 27 and a half. That's the range I'm seeing.
Oh
There's
wow.
a lot of open interest calls at 31, which is going to be resistance to price. Where is the price right now? I haven't checked.
30 76 we just ticked to.
Yeah,
So
so
big
if I
volume.
was to make a bet right now, I would take puts. But that doesn't mean it's not going to surprise everybody and go up. It's trying to fill a gap, it looks like a massive gap. I don't track it fundamentally, but I do remember it was in the news, and I can't remember to what extent. So I don't like it in the long term play on an event this week because the options market is not expecting good things.
What about Apple? Because we were just talking about that right before you came on there, and I had somebody telling me yesterday that they were looking at this thing as a potential short here. Joel, I think I made a good same thing that I actually said to the person was I think it's got to hold 100. As long as it's above 100, I think the bulls are in control. Is there anything from open interest this week on Apple that's really making you think differently?
Well, I was in the same boat, saying that it's looking like it wants to come back under 100. Um, and this week, up until this morning, I haven't verified my data. I got a new system to pull data, and I haven't verified it. But if I'm looking at it and it hasn't lied to me this morning with regards as to like structurally broken, and it's looking like the bears are losing the fight. Yesterday, the 100 line for this week's open interest was solid resistance, and and building above it. So a little bit less at 101, a little bit less at 102. So definitely they wanted to keep the 100 fight, but it looks like they gave up overnight. I'm not sure why, because they looked like they were winning into the close. So the 100 line is still high open interest. So it's still a magnet, but it's no longer clear resistance for Apple. Still some resistance in 102 and building above that, not building because it's just stepping away from solid support. But 100 looks like decent support now as high open interest for this week only. This data only tells me like what's going on in the short term. And if you want to step out in time, you can do the same analysis, but it doesn't pay as much because there's so much time in between. So anything can happen. So this guides me better from day to day.
Hey Nick, I always enjoy it. Your macro and your longer term outlook. And sometimes, being a shorter term trader, you kind of ignore what's going on longer term. And you've been pretty good maintaining your bullish thesis. We had that, that correction, small correction under 1900. And then we just added 100 points in the S&Ps here, really going back in less than a month. Hit a psychological number yesterday, 1999.75. Is there anything that you're looking at? Is there anything you're taking profits in, or anything that warning signals that are flashing that we might hit an intermediate top?
Yes, and I am more bearish in my trade setups. As a matter of fact, I said all of my longs are just hedge bearish positions. And the way I take bearish positions, I don't want to be a hero and fight it at the line. Like I know a lot of people are trying to fight the 100 Apple, the 2000 SPX. I say, okay, I'll fight it, but I'll pick the options for September, October, December, and even next January. I don't care. I'm going to make the same kind of money, only with an easier fight. So why be the guy or girl trying to fight the 2000 line here? Why don't I fight it with a credit call spread up higher for October, like 75 points higher? Let them take the 2000 and see if they can get it to 3000, and then I'll fight it up there. So all of my trades are bearish in nation because now my thesis is okay. We've gone so far, and the reason why I flipped bearish is because we're ignoring so much geopolitical risk. The world is awful geopolitically right now. Awful, awful. I come from the Middle East, and that place is just waiting to blow up. I've never seen it this bad. I grew up there, and I've lived through war, and this is just as bad as it gets. We have a group that's running away with it, and we don't care. All we care is we don't want to put boots on the ground. We're going to have to. This is ridiculous. It is the news, if correct, is just awful. Plus, you have the Ukraine. Yesterday, they dissolved the government. They want to snap elections. Nobody talks about it. Also, there was supposed to be a Putin and his counterpart meeting this week, today actually. Sometimes depends on the time difference. Nobody's talking about that. Germany is probably on the side of Russia with these things. Nobody's talking about that. So globally, the market is no longer reacting negatively to the headlines because they sound the same and they've heard it before, even though they're getting worse.
But
That's my opinion.
Nick, though, we've ignored these geopolitical risks the entire year here, though they've been there. They've
We
basically been there
haven't.
the last 5 or 6 months, and the market
We,
continues to go higher here.
we
What it's
have
going to, we haven't? We haven't ignored them?
no. We react for a couple of days, and we
Yeah, a
have these
couple of days,
wishes.
and then we shrug it off, and we just go right back higher here again. So I just don't know what's going. So maybe when we're going to get another reaction when the next headline breaks and we drop 10 or 20 S&P points, but then 2 days later we'll seem to be right back at the highs again. What's going to change that perspective? Like that okay, buy the dip, it's coming in, it's going to be okay, because that's what really is the problem here. Why the shorts can't get anything in this market is because every time we pull back 20 points,
We're
the
gonna get
shorts come in and cover, and the longs come in and buy the dippers come in and just drive us right back up again. What's going to change that?
we're gonna get a whoosh that's gonna gather enough steam, like a snowball, and make a difference. I don't know what's gonna take. Meanwhile, I'm just trading the range. That's why I said, even though I think that's what's gonna happen, I'm not fighting it or banking on it. Maybe here's a theory. Maybe that everybody, more people complain about light volume. And so maybe a lot more people are trading the options versus. I don't think they say when they say light volume, they're not saying about the options because I think the options are a buzz. So their light volume is an actual tickers, and maybe it's easier to cover and get out when you have the options. So we're not seeing these wishes carry momentum. Maybe that's playing into it. Maybe that's the new normal, as they say. So we're gonna have, we're gonna, which is my thesis, right? Room to move, but nothing to leap up and no major disasters. So my thesis just got solidified. So that's why I'm just trading the ranges. I really don't know. All I know is that the world is awful. I don't want to be the doomsayer and be like Dr. Doom out there who has one position his entire life. And I don't want to be like a Kramer who's like, buy, buy, buy everything. So I don't know what's going to take. I know that the headlines are terrible, and so I'm cautious. I don't want to be close to the line. I don't want to buy. I don't want to take a credit put spread, be bullish at 1975, and I don't want to be bearish at 2010. I'm going to be bearish at almost 3,000, and I want to be bullish at almost 1,900 and nothing closer than that.
Where are you from in the Middle East?
I was born and raised in Beirut.
Oh, okay. Right in the heart of things, huh?
Yeah, a
Okay.
very peaceful little town.
Yeah, boy, you got a perspective on things. All right, Nick. Well, thanks a lot for coming on. We've covered a lot of issues here. We've covered the macro outlook. CMG. We'll be keeping an eye on that one. And thanks for coming on. We'll talk to you next week.
All right, thanks, guys.
Thanks, Nick.